Good morning and welcome back to Almus Market Mornings. Markets are discounting machines that keep clinging on to narratives but have short-term memory. Last week's poor sentiment due to fears by AI disruption seems to have been forgotten with the newly rediscovered risk appetite. But there are a few things that are also cooking in the background, which I would like to touch upon. First, the Chinese regulators have urged financial institutions to pare down their holdings of the US debt. Now, this is something that has been talked about before, but it's strange that a news item has come out stating this explicitly. US yields were subdued. This is, of course, a news item, so its significance is not known at this point. But when it comes to currencies, dollar has broadly weakened. Euro is trading near 1.19, and of course, someone needs to rerun their correlation analysis because these days, when dollar weakens globally, rupee also weakens. Good morning, JK. What is your strategy at this point for rupee? Because somehow, despite the positive sentiments, we are seeing rupee weaken once again.
Good morning, Swaraj. Yeah, I think, if you look at what you initially referred to as the changing theme, yeah, which, we saw a big sell-off earlier and then it retraced quite strongly yesterday. And it is that kind of year so far. We have had emergence of very many themes which looked very strong. We started off with, the bond market sell off, and then we saw yields going up all across, and then now they've all cooled off. Then we saw the precious metals rally big time in January, but within 1 week, we saw the whole, most of the moves, or rather, yeah, most of the moves of the year actually retraced. Then keeping the market in kind of, limbo, what to do next. And the same thing is also happening with the dollar. The dollar started off weakening in the year. We fell more than 2%. And then once there was a trigger with Kevin Warsh being appointed as being chosen to succeed Powell, and most of the move in the dollar was reversed as well. So that I think market is just testing waters. What's where more vulnerability lies, and that's where probably the next big move is also likely to happen. But then it is better. It's a warning sign also to the market that don't presume that some big moves always is indication of a larger trend developing. It may be just a flash in the pan, or it can be just a position adjustment like it happened in precious metals. So I think we need to be very open still. Market still doesn't have a settled theme. But that said, I think quite a few things that are happening are making me think that something more interesting may be brewing. And that's one area where I'm seeing in the yen, because if you look at it for quite some time, people have been talking about the fiscal problem in Japan, and then yen weakness, yields going up. All that has been talked about, and there have been calls for yen to fall to 170, 180, and all that. All this is happening, even as the dollar's call itself has been on the weaker side. And the recent election, where Takaichi got, along with her coalition partners, two-thirds majority in the lower house. And one would have presumed that yen would fall quickly to 160, because that's where the vulnerability lied, and she would be spending more on fiscal, and she'd be favoring weaker yen and all that. But I think market is doing the reverse now. Uh, After the election result, yen went to 157.60, if I'm right, and currently we are at 155.60. What is emerging now is that though there will be some tax cuts by Japan, that will not require new borrowing, and that's a big thing. So which means that fiscal may not worsen much also. And apart from that, Japan is also planning its own defense spending. To reassert its own independent geopolitical, safeguards. So I think, and more importantly, suddenly you see that the yen yields. very attractive. Like 40-year yen had gone to 4%, and 10-year is even now at 2.3%. So suddenly, when there is a question mark about US treasuries, whether they would fall, where they are headed, but the Japanese interest rates suddenly have become very attractive. So it's very well possible that, even there, for a market which is looking to diversify the dollars, yen has also become another destination. This is what I feel. And that's the reason why I feel yen could surprise on the upside even without intervention, because the demand for yen might increase. Because if you look at the structural position of the market is structurally long of dollars because of all the positives that we have been talking about, the dollar US exceptionalism and all that. And the reverse was the case with yen, because always it was used to carry trades and yields were very low, and Japanese economy is weak. But all that has, kind of seen reversing. And as I'm thinking, I think yen could be a surprise mover of the market. Maybe some strength is definitely on the cards, and that too, particularly when we have situation, where the market thinks the dollar will be weaker based on its structural issues. And in this context, whatever you referred to, Chinese authorities move on the treasuries. While China is not holding as much treasuries as they were holding some time back, it's down to about 700 to 800 billion from about 1.4 trillion that we were holding. Their indication to the private sector to safeguard against the exposure to US treasuries from a market concentration risk perspective. So that's the thing. It's not that tomorrow you're going to see a big sell-off because of this and all that, but that is a clear-cut indication from them where eventually the market is likely to go. That US treasuries are not going to be the preferred place of safe investment, and that's where even the private sector need to take care. So we all know that while we have had tariffs increasing and all that, US has not moved an inch towards improving their fiscal deficit or addressing their huge debt. Their finance costs are still very high. So I think the time for reckoning on the US treasuries or the fixed income market is very much in the hunt, very soon. So I think that's a year, that's the kind of times we are passing through. So I think I'm watching out more on the yen, and of course Chinese yuan also. Today the fixing was at 2.5-year low, and this is one surprise for the market as well. Like Chinese yuan has steadily strengthened during the year, and the Chinese central bank fixing has been more or less in the same direction, now at 2.5-year high for yuan and low for the dollar as well. So dollar's weakness in some, perhaps the dollar's weakness is shifting from euro and GBP towards some of these currencies. Now you can see the Australian dollar and Canadian dollar strengthening on the basis of commodity strength, and now the Chinese yuan and yen are maybe participating. Euro and GBP maybe making, and gold also maybe taking a back seat for some time. Not that they're going to fall, but could be. So that's, I think, the larger picture of the dollar diversification that we have been talking about can be, it will not happen wholesale selling of dollar against everything. It's happening in bits and pieces, and maybe that's what we are seeing right now. Anyway, to summarize current position, dollar I think is still showing some vulnerability on the downside. I think important numbers coming up this week. Today, retail sales. Tomorrow, non-farm payroll. End of the week, we have the CPI number. So, the Fed's dual mandate of reaching high, maintaining high employment or low unemployment, and also keeping inflation under control. These will be put to test, in their monetary policy as we face these important numbers this week, as well as consumption numbers. So market will be very much glued on to that. There was also some statement from Trump which said that US can grow at a very high rate, if Kevin Warsh does, follow what is expected of him. Indirectly, it is saying that independence of Fed is not going to be is going to be under threat even after Kevin Warsh comes in. So that's the thing. And of course, for the dollar rupee, I think the central bank is not aligned with the rupee, seeing a runaway strength. So at the same time, we are not seen a resumption of big flows. We did have some flows from FIs last week, but then no big flows have been seen, and demand for oil persists, and oil prices have been higher. I think we almost retrace the entire move of dollar rupee of January, where it went from 89.90 to 92, and we come from 92 to 90.10. So I think that's also another reversal of theme that we have happened. But then I think central bank is currently apart from demand for reportedly for some defense payment and debt repayments at lower levels, which is absorbing the modest flows. So I think as I've shared, I think we'll have this range between 90 and 91 for some time before we get the bigger flows. That's what the market is looking ahead to. Otherwise, there will be a gradual push on the higher side, irrespective of what is happening on the overall dollar. Thank you.
Thank you, JK. And I think the broader theme, which you interestingly mentioned, is that dollar weakness, it may be shifting towards more towards currencies like the yen and Chinese yuan. Chinese yuan, interestingly, has been fixed at the strongest levels in the last 2.5 years. And we are seeing Chinese yuan, yen, and Aussie with its commodity rally also strengthening. So this seems to be a broader theme for the dollar weakness 2.0 that seems to be playing out. But when it comes to rupee, we remain range bound with a bias towards the weaker side. Dollar demand still persists. Flows still remain weak, so the structural issues are still there. And at lower levels, we are seeing defense-related payments and debt repayments. So broadly, 90 to 91 should be the range for the coming days. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.